Yo, my friends. Listen, as promised, here we are in 2J's first ever, aka Justin, LOL, Justin's first ever finance video. What are we saying? So listen, I really like this stock on the screen. I told you guys I was probably going to do like a little recommendation to start. We'll see where everything leads from here. All right, we can call this a recommendation, but it's more so just saying why I like this stock, why it could be good for someone to buy. I'm not really going to disclose anything about if I own any of this stock or stuff like that, because, everyone can buy or sell this stock at their own will, you know what I'm saying, no matter what I say, right? But this is a stock I've been following since about right here, July, okay? And I've watched it. This is the chart, okay? They had an IPO in 2022. An IPO is an initial public offering. So that's when a company first goes to the stock market and puts their stock up, right, for sale. And it IPO'd at 18. All right, so this is really common. You see a drop off after the IPO because there's a lot of hype, okay? There's a lot of psychology behind this sometimes, hype, human hype. So it falls off, obviously. It hovers $2, $3, $4 a share. We have a big spike in April, and I started following it here after it fell off in April. And if you watch the chart, it sort of goes up to 6, comes back down, goes up to 6, come back down. And you can see where we are right now, currently $5 or $6 a share. So really easy to accumulate a couple hundred shares, maybe even 1,000 shares if you had the free money and whatnot, right? So if we scroll down, we'll get into the reasons why I like this stock. Usually when I review stocks, I take a quick glance, at the news. I take a quick glance at the financial highlights, valuation measures right here is what they're calling them. Yeah, I usually take a look at the PE. This is a price to earnings ratio. It can be used in a lot of different ways, but essentially it's telling you how many times the share price is selling over the earnings per share, right? So, how high is the share price relative to the actual earnings that we're making per share available in the stock market? That's a measure of that. Low is sometimes an opportunity of value stock, which is sort of why I like this stock. It's a value, it has a chance to grow. And other quick things to look at over here, you want positive profit margins. You want a company that makes money. You want positive return on assets, positive return on equity. This company has $500 million in revenue, which is a pretty solidified company. You can see net income available to common shareholders right here, $23 million. That's how much the company's making. That's something you really want to look at. When you're reviewing companies, even when you're looking at value stocks like this, you want to make sure that the company's making money, right? I usually take a quick glance down here. Not that this part I believe is important. These parts are like professional analysts. So the professional analyst target for this stock, 875, the highest 12. Most people consider it undervalued. Strong buy and buy covered by 7 analysts, right? This is what this is saying. So, the professional analysts also consider this stock a buy. One of the things that I really pay attention to close, those the earnings. You want to see earnings beat. So what this is saying is the market predicts, or the professional analysts, whatever we want to say, the market overall predicts that, they would have had a 9-cent per share profit. In this quarter, they actually had 16. This one, 21, 22. And then the most recent profit, AKA why the share price climbed a bit, we beat by, or it was like 11 cent was the estimate, 28 cent was the actual. So what's that? 17 cent beat earnings per share. And so that's one of the reasons why I like this stock. They're starting to beat on their earnings estimates relative to the market pretty consistently, right? And that's probably also why the professional analysts also see this as a buy. Okay, most importantly, I review the chart before we move on. I review the chart a lot. This is called trend analysis, technical analysis, I think maybe is another name for it. People use the chart and try to track it over time, which, the stock market will follow like a roller coaster, which is a fair play, okay? But I'm a more long-term investor, I would say. So, longer term, I'm looking for companies that are going to be making money, hopefully as they increase their revenue, right? They increase their net income available. They're making more money. So, I don't pay huge attention to the chart, but it can play a role. If you buy at peaks, you can expect maybe to lose a little bit for a little bit until the next until the next positive earnings call or next positive news or whatever. So, me, mostly what I base my investment decisions on when I'm reviewing stocks is the financials. I have background in finance, right? So this is what I understand. This is my language right here, right? So the first thing I really look at is the income statement. Okay, this is essentially profit and loss statement is another word that could be used for it, right? So here's the revenue. You see 2020, 2021, 2022, and then this would be like what is this? This is essentially time to month, time to date, year to date. I don't know exactly what that stands for, but that's essentially what it says, year to date. You can see the revenue climbing, okay? You see the cost of revenue climbing, which would make sense, all right? But as I said, gross profit, which is total revenue minus cost of revenue or cost of goods sold, right? Gross profit, this is also climbing. So we're making more money as we're making more revenue, okay? And then the company's growing, right? So you would expect operating expense to grow, which is like salaries, research and development, stuff like this, right? And as you can see, over time, as we've made more money in this company, the operating income, went from negative to positive. This year, they did really well. They probably made some investments based on there being higher depreciation. We could assume they probably bought property, made big capital investments, right? So, solid operating income climbing as the total revenue climbs, which is something you really like to see, right? Earnings per share right here, this is a big one. Mostly for the past couple of years, positive earnings per share. That's something you really want to see. Ideally, last year hopefully is a blip, right? They don't repeat something like this. Ideally, always positive when you're reviewing companies, something you want to buy. But this one, thought it was still good. EBITDA is a big measure that people use. It essentially backs out depreciation and amortization from the operating income, right? It backs that back out. And, effectively, it's been growing as well, which is something, EBITDA growing is a positive thing, similar to gross profit, similar to earnings per share, similar to net income. That growing over time as you make more money, very important as you're reviewing income statement, right, in terms of investment. And then, of course, net income. You want to see the company making money, right? And so last year right now they're making money. Last year was a tough year for them, it looks like. But, like I said, they also made capital investments from this year to this year, which will probably show in their cash flow statement. Next thing I look at, which is also very, very important, balance sheet, right? So if you look at the total assets and total liabilities, the first thing I look at is the current assets and the current liabilities, right? So the current assets are is the tangible amount of money, the book value, the things you have on hand that can be liquidated into cash, or is cash, or can be, or are expected to be liquidated into cash within 12 months, right? And then your current liabilities is the amount of money that you owe in the next 12 months. So one of the things I look at is to make sure that, the current assets are greater than the current liabilities by some significant portion, right? So you want to make sure that if need be, we can liquidate some of these assets and pay off some of these liabilities, and the company will continue to survive, right? That's sort of why I look at that pretty closely. Total liabilities, something I also look at. You want to make sure that your total assets are greater than your total liabilities by a significant portion, in my opinion, right? You want to make sure that in hard times, the company, like I said, could liquidate some of their assets to pay down their liabilities and continue to survive. Because, it's not always easy to survive as a company, so it's important that the company is liquid. That's pretty much what I'm saying, liquid. The ability to turn into cash, right? Working capital, another big measure, which is, I believe it's current assets minus current liabilities, which is just showing how much free money you have, for lack of a better term, available. That you would like to see that to be growing over time as well. And then the debt, you would like to see the debt really going down over time, unless it's responsible debt, right? Like they're building a building. They're, like I said, they're doing some big research. They're developing some piece of software that's proprietary, whatever, right? Just productive debt if the debt is going to climb. And you can see that the debt climbed from this year to this year. That's probably a net purchase, like I said, of some type of property, etc. And you can see that they're paying that debt down relatively quickly, which is something you really like to see. Lastly, cash flow statement, which is where you would actually see probably from this year to this year some purchase. Nope, not much. It was something else. Investing, cash flow, capital. There it is. So they purchased a business. That's what it was. So it was an acquisition. So that's where your cash flow was from 2020 to 2021 that I've been talking about. But really, you want to make sure that operating cash flow is mostly positive, right? Operating cash flow is telling you from the operations of the business how much free cash flow is being generated. So, effectively, is our service or are our products making money, pretty much. Investing cash flow, for lack of a better term, that's you purchasing things for the business or buying a business, etc. Or if you sell something, it will be positive in investing cash flow or whatever. Financing cash flow is sort of what it sounds like, but financing is like taking on debt, right? So like here, they took on debt to purchase to do the acquisition. And then here they are paying down that debt, right? So it'll be negative if they're paying down debt. It'll be positive if they receive debt from an institution because they're receiving money, right? Or any other, like angel investor, whatever. This is sort of where that it would be put because you're going to owe this money back. You have to record it in the cash flow statement. But yeah, last but not least, free cash flow, something really big I look at. You want to see that going to be positive over time. You want to see that the company, like I said, is making money. They have cash left over. They have several options to reinvest that back into the company, which they are likely doing. They can pay down debt, which they're also likely doing in this scenario. They can give it back to shareholders in the form of a dividend, which this company probably won't for some time because I believe this is a value company. So I believe it's, buy low, sell high a couple years from now or maybe a year from now. I don't know how fast it will go, but I do believe it will go up. You know what I'm saying? But yeah, that pretty much covers it, my friends. So yeah, that's why I like Solo Brands. If you guys don't know anything about Solo Brands, you should do the research. They make really cool products. I've looked at their website. Their most popular product was actually a really, really good Christmas gift this year. Some people in my family got it. It's like a smokeless stove. If anybody remembers the Snoop Dogg ad that happened where he said he was going smokeless, this was the company. Like it was like an ad for this company. And I had already found this company prior to that Snoop Dogg announcement, so that was just something really cool that happened afterwards. But yeah, you can see the share price has climbed in the after hours, but even at $6 a share, I feel like there's a lot of upside, my friends. Listen. Anyone new to CME, or maybe anyone who was a part of the gaming has any stock they would like me to cover and give them my opinion on, or maybe some other recommendations, some things you guys want to know, let me know, my friends. I hope you guys enjoyed it. Hope you guys learned something. 10 out of 10. Peace, peace, peace.